Welcome to Fortune Maker's Insight Edge, where smart minds sharpen their edge. Today, we're diving into one of the most market-moving events of the month, the CPI report. This single data point can swing stocks, bonds, and currencies in seconds, and knowing how to prepare can make the difference between catching the move or getting caught in it. Let's walk through how you can be ready for CPI Day, with confidence, not chaos. What is CPI, and how is it related to inflation? The Consumer Price Index, CPI, measures the average change over time in the prices paid by urban consumers for a representative basket of goods and services: food, housing, apparel, transportation, medical care, recreation, education, and more. Let's understand how CPI data is collected. The Bureau of Labor Statistics gathers 80,000 plus monthly price quotes from retail stores, service providers, rental units, and doctors' offices, covering 93% of the U.S. population. CPI includes user fees and sales/excise taxes, but excludes income taxes and investment prices. It adjusts for substitution effects, when consumers switch to cheaper alternatives; quality changes, accounting for improvements in features or durability. Weights for each category reflect current consumer spending patterns. Housing costs are based on rental surveys of 50,000 units, capturing both rent changes and owners' equivalent rent. The estimated rental value of owner-occupied homes. What is its relationship to inflation? CPI is the most widely used headline measure of inflation. When CPI rises, consumer prices have increased inflation. When CPI falls, prices have decreased deflation. Central banks, investors, businesses, and the public use CPI to judge inflation trends and to guide monetary and fiscal policy. Most recent published CPI. June 2025, the all-item CPI rose 2.7% year-over-year for the 12 months ending June 2025. Bureau of Labor Statistics release. Next release to discuss July 2025 data is scheduled for Tuesday, August 12, 2025 at 8:30 a.m. Eastern Time as per Bureau of Labor Statistics calendar. Because that report is due tomorrow, the definitive July figures will be available then. What is market consensus and economists' forecasts? Economists broadly forecast headline CPI plus 0.2% month/2.8% year-over-year, and core CPI, ex-food and energy, plus 0.3% month/3.0 to 3.1% for July. Always check the Bureau of Labor Statistics release page at 8:30 a.m. Eastern Time on release day for the official numbers. Forecasts can differ meaningfully from the official print. Why is CPI important? Monetary policy. The Federal Reserve watches CPI and the related PCE deflator closely to set interest rates. Hot CPI reduces odds of Fed rate cuts or prompts hikes. Cooler CPI increases odds of easing. Markets. CPI moves bond yields, equity risk premiums, currencies, and commodities almost instantly. Traders reprice rate expectations and risk assets based on the print. Real purchasing power and wages. CPI affects real wages, cost of living adjustments, pensions, and contract escalators. Corporate planning. Businesses use CPI forecasts for pricing, wage negotiations, and capital allocations. CPI is more than just a number. It's the heartbeat of the economy, guiding the Federal Reserve, influencing businesses, consumers, and markets alike. With a 2% inflation target, the Fed adjusts interest rates based on CPI, tightening to cool inflation or loosening to spark growth. CPI drives cost of living adjustments for over 70 million Americans, from Social Security and federal pensions to school lunches and tax brackets. In housing, a rising CPI can mean higher mortgage rates and increased rents. In financial markets, it can sway stocks, bonds, and investor sentiment. And in the workplace, CPI plays a role in wage negotiations, union contracts, and earnings growth. The bottom line? CPI doesn't just measure prices. It shapes the economic pulse of the nation. When is the CPI announcement in August? Bureau of Labor Statistics is going to publishes the monthly CPI on Tuesday, August 12th, 2025 at 8:30 a.m. Eastern Time. What are the potential scenarios for the CPI announcement? Tomorrow's CPI data could set the tone for the markets, and the stakes couldn't be higher. Scenario A, hotter than expected. If headline or core CPI comes in above expectations, it signals inflation is re-accelerating. The Fed's rate cut hopes get pushed back. Bond yields jump. Growth and tech stocks could take a hit. The dollar gains strength, and gold may retreat. Scenario B, in line with expectations. A match with consensus means little change in market pricing, at least at first, but traders will dissect the details. Shelter costs, used cars, medical care, and even revisions could sway sentiment in seconds. Scenario C, cooler than expected. A softer print boosts the odds of earlier Fed rate cuts. Bond yields may drop. Equities, especially cyclicals and financials, could rally. The dollar weakens and gold might shine. But if the weakness hints at a slowing economy, risk assets could still feel the chill. Remember, the market won't just trade the headline, it will trade the story behind the numbers. What will be the impact on the market based on CPI tomorrow? Tomorrow's CPI report could shake up every corner of the market. Here's how. If inflation runs hot, expect the 10-year Treasury yield to jump and bond prices to drop. Stocks could see a risk-off move, with growth and tech names under pressure, while financials may get a lift. The US dollar strengthens, gold usually sinks, and volatility spikes, but only for a short window. If inflation cools, flip the script. Yields drop, bond prices rise, growth and cyclical stocks rally. The dollar weakens and gold shines. And here's the trader's secret. The wildest swings hit in the first 10 to 30 minutes after that 8:30 a.m. release, when liquidity thins and spreads widen. In other words, tomorrow morning could be a roller coaster. How CPI moves markets. When the consumer price index drops, markets don't just react, they snap. History shows the first hour's move after CPI release can be extreme, and often wrong. Traders jump in, algorithms fire, but once investors dig into the details, direction can flip fast. And the details matter. Was the move driven by rent, medical costs, transportation, or just a spike in gas prices? Headline beats fueled by energy aren't the same as core services inflation, and markets know it. But here's the real driver. The federal CPI doesn't just tell us about prices. It tells us about interest rates. If the surprise shifts the Fed's next move, say, delaying a rate cut, bond yields pop, the dollar jumps and stocks re-rate. So, how do the pros play it? Before release, they trim risk, hedge with options or futures, and make sure liquidity is lined up. At 8:30 a.m. sharp, they scan the data. Core versus headline, shelter, used cars, energy, revisions, and instantly rerun Fed rate models. After the dust settles, conviction takes over. Hotter CPI can mean rotating into banks, cooler CPI into growth names. In bonds, duration and hedges are adjusted, and within hours, investor relations teams push out crisp client updates. CPI day isn't just about a number. It's about speed, precision, and reading the story behind the print. CPI day game plan. Your practical checklist. 1. Know the release time. CPI drops at 8:30 a.m. Eastern from the Bureau of Labor Statistics. Set your alarms, no excuses. 2. Have your accounts ready. Broker account funded, margin cleared, liquidity in place. On CPI day, seconds matter. 3. Decide your plan before the bell. 3 scenarios: beat, in line, or miss. Write down exactly what you'll do in each case. This is how you avoid emotional, knee-jerk trades. 4. Use execution safeguards. Think limit orders, scaled entries, or trading algos. First few minutes after CPI can be a volatility storm. Protect yourself. 5. Watch the details, not just the headline. Core CPI, shelter costs, and any revisions can shift the market's interpretation faster than the headline number. 6. Listen to the Fed after the print. FOMC minutes, Fed speakers, and follow-up economic data can extend or reverse the CPI reaction. Closing guidance. Preparation beats emotion every time. Stick to your predefined rules. Focus on the components. Shelter and core services carry big weight for Fed decisions. And remember, CPI is information, not a lottery ticket. Short-term moves can whiplash. Base your bigger positions on trend evidence, not adrenaline. Stay alert, not anxious. The market rewards those who are prepared, not those who panic. Keep your eyes on the data, stick to your plan, and let discipline guide your moves. Stay connected and stay informed with Fortune Maker's Insight Edge.